Okay, hello, good afternoon, guys. Trust you are having a wonderful day. Trust you are having a wonderful day. So, this is the long-awaited video I promised to drop for you. I've been so busy, that's why I'm dropping it late, but at least you are getting it now. So, today we are going to be talking about entries and entry models. That's what we are going to be talking about. Entries, entry models, depending on how you want to call it. So, you know, this has been a real concern to most traders. After drawing out your PO highs, your you know order blocks and all, when price comes into it, probably you drew out your order block on daily time frame, on the bigger time frames. Then how do you enter the trade? Because we've been laying emphasis on the fact that don't take your trade on the higher time frame. Don't take your trade on the higher time frame. So how do you break it down? Talking about entries, coming to lower time frame entries, and this is how we go about it. Simply, that's what I'm going to be talking about today. How we go about all these entries. So, for me, I have a rule of thumb. I have a rule of thumb. If if my POI is on the daily time frame, if I'm deriving my POI, assuming this POI that I have here is on the daily time frame. Well, okay, I'm still coming back there, but how do we enter a trade? This is your valid POI. I'm still going to talk about what I skipped. This is a valid POI. When you have price moving and approaching a particular POI, we are going to be having structures. We are smart money traders, so our emphasis is always on structure. And you have price going like this. Immediately you have price hit a PO high. Immediately you price hit a PO high. What you are expecting to see happening is a response from the PO high. We don't just enter automatically from the PO high just like that. Just because you have a PO high doesn't mean it is going to stand or it is going to hold. So we'll wait for a response. And what kind of response am I waiting for? If you look at air, price has been bullish. And for me to sell, I need to have a bearish structure. And how do I know whether the price is bearish? I need to have a break of structure, or as the case may be, the first break, change of character. Then when you have something like this, price would have created a supply zone. Then you wait for price to come back into it. Then boom, to the downside. This is what you want to have. Let's call this one, let's call it a change of character. Let's call it a change of character. That's okay. So we want to see a change of character. That means what simply happened here is supply has gained command of the market, because for this, price has been putting higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Then this low put up this high. There is a demand here. That's why this low was able to put up this high. So for this area to be broken, that means supply is enough in the market to break the level of demand that is there. That's simply what it means. So if this supply puts down this low, definitely when price returns to this supply, you are expecting a further sell in the market, because at this point, supply outweighed demand. This market is all about supply and demand, supply and demand, supply and demand. So at any point in time where your demand outweighs your supply, that is when we have a buy. And when your supply outweighs your demand, that is when you have a sell. And that's what has happened here, because supply has eventually outweighed demand. Because for us to have higher high, there is a demand there that put up this high. There is a demand there that put up this high. There's a demand there that put up this high. There's a demand there that put up this high. Then at this point, supply has outweighed demand. This market is all about supply and demand. is when you have excessive supply in the market, that's when you have a sell. When you have excessive demand in the market, that's when you have a buy. So at this point, supply has exceeded demand. Then you have a break of structure, price returns to mitigate the new level of, what's it called? The new level of supply, then boom, to the downside. Now, this now brings me, okay, let me give you an example of a bullish play as well. Price has been coming. You have your PO high. Price, then after price approaches your PO high, you want to see demand coming and break the supply. Then you expect price to return. That's when you want to take your trade to the upside. That's where you want to take your trade to the upside. Now, this now brings me to what I skipped the other time. Assuming this is a daily PO high, then when price is approaching it, you let price approach the daily PO high. Then after price has approached or get into the daily PO high or your higher time frame PO high, then you switch to your entry time frame. Okay, now this is now where the war comes in. This is where many traders, this is where they get it all wrong. Assuming for me personally, if I get my PO high on the daily time frame, I use 1 hour for confirmation. That is, after price has gotten into my PO high, assuming this is my daily PO high, price has gotten into it, then I switch my time frame to 1 hour time frame. And what am I looking for on 1 hour time frame? A change of character or a break of structure, just like this. That's where I'm going to get my confirmation that yes, price is really ready to go. Where many people miss it out is they use maybe 4 hours time frame, daily time frame PO high, then switch to 1 minute for confirmation. No, 1 minute we always, we most times give you a false entry because you easily see, except you want to scalp. But if you really know you want to ride the trade down or to the upside, you want to ride it for you. For a daily PO high, I switch to 1 hour for me to get this play, the lower time frame play. Then for a 4 hours PO high, I switch to 15 minutes for me to have my break or my change of character, just like this. For a 1 hour PO high, I switch to 5 minutes time frame for me to have a play like this. For a 15 minutes PO high, I go to 1 minute time frame for me to have my change of character of my break of structure. Because you don't just take a trade automatically just because price is approaching your PO high. No. Price must show you that price must be committed to the downside before you jump into a trade. It is better you miss a trade than get into a wrong trade. Price must show you commitment to the downward side. And how is price going to show you commitment? By giving you a break. It must break this structure. You must immediately this structure is broken. You can now see that price is now bearish. So for you to get, multiple or refine your stop loss, assuming this is a daily PO high, price is approaching the daily PO high. I switch to my 1 hour time frame. I have my break of structure on 1 hour time frame. Then I have my new PO high, which I'm expecting price to come and mitigate the new 1 hour supply. Immediately price is coming into price reaches the 1 hour supply. Then if you still want to further refine your stop loss, I switch to 5 minutes time frame. And what am I looking on 5 minutes time frame? A break of structure, just like this kind of play on 5 minutes time frame. Then 5 minutes time frame too will give you its own supply zone, which you are going to take the trade from. I believe everybody is, getting this. So for a weekly PO high, I use 4 hours as my confirmation. For a daily PO high, I use 1 hour time frame. For a 15 minutes PO high, I use 1 minute time frame. You can even use, if you are patient enough, you can use more than one time frame. For instance, let me give you this example. Let me clear this away. Okay. Okay. So for instance, price is approaching by 4 hours. You know, I'm a day trader, so I like to use 4 hours for my higher time frame. Then assuming price has approached my 4 hours time frame, immediately I see that price is in my 4 hours time frame. What next am I going to do? I will switch to 15 minutes because that's where I get my confirmation. So assuming I've switched to 15 minutes and I get something like, maybe price is just, okay, then price eventually break structure to the downside. Price eventually break structure. Let me remove this. Price eventually break structure. Price eventually break structure. Then you see on 15 minutes has given me its own PO high, its own supply zone, which I'll be taking the trade from. Because I switched to 15 minutes, 15 minutes has given me a break of structure to the downside and giving me a supply zone. Then on that 15 minutes, I will now wait for price to, return back into the 15 minutes supply zone. Then I will switch to my 1 minute time frame. And what do I want to see on my 1 minute time frame? The same play, the same break of structure on 1 minute time frame, then use 1 minute supply, then take my trade. And my stop loss will just be right above the 1 minute supply. So that's how to refine your entry to lower time frame. You use a bigger time frame or PO high. When price gets there, you come to a lower time frame. You can still further refine it, but over refinement at times, it can make you lose a trade. By the time you refine it to the tightest of stop loss, you want to use a 1 pip stop loss. Most times you lose trades. I'm not going to deceive you. Most times you lose trade, but if it picks you up, it's going to give you a very good risk to reward. It's going to give you a very good risk to reward. So at the same time, it's not every time I wait for confirmation before I take my trade. It's not every time. There are sometimes I go aggressive on the market. And what are the instances where I go aggressive on the market? For instance, I have a PO high. Price is approaching my PO high. Price is approaching my PO high. I have price approaching my PO high. Then maybe right below my PO high, I now have maybe a series of consolidation. Maybe price even gave a kind of break to the downside. Let me show you. Let me finish with the diagram. Maybe price even gave, everybody knows that liquidity is being built up here. Liquidity is being built up here. So if I have a consolidation before my PO high, in this situation, I know that price is just, is just coming up with a kind of inducement just to lure in the early sellers. That's why, because some people will see this consolidation and see price breaking down, it quickly jump into the market and quickly take their sell. But since I already have my supply zone and I'm seeing this build up, I'll just wait for it to play out, tap me in, then take my trade. In this kind of situation, most times I don't wait for another break of structure, because when I have liquidity before my POI, is a confirmation that my POI is valid. So what I look forward to in my point of interest is what I look forward to my confirmation checklist. Let me show you my confirmation checklist. My confirmation checklist. Now, number one, is there a sweep of liquidity? I don't know the sweep of, maybe probably you have something like equal lows and price sweep it, then give a break of structure to the upside. Then number one, my checklist, is there a sweep of liquidity? That's what I want to see first. Sweep of liquidity, which we have here. Then imbalance. Is there any form of imbalance? Imbalance. That's number two. Then a break of structure. Then after having a break of structure, then what I want to see again is mitigation. And the mitigation has to be, in the case of a buy, the mitigation has to be right within my discount zone, which is below 50% FIB. So, and one question I want to ask myself again is there any form of inducement or liquidity buildup before my POI, which is a confirmation of my POI as well? Because, for the impatient traders, by the time price is close to their POI and they start seeing something like this, price will even come very close at times, but won't still pick your POI. The ones that are not patient will easily click a buy, but all of a sudden price will be going, then just see price tap into the POI, then the original move is going to start. So, when I have liquidity before my POI, like I told you, I want to see, is there a sweep of liquidity, break of structure, imbalance, then mitigation in the case of a buy, as price returned into my discount zone, because I only want to buy when price is below 50%. I only want to sell when price is above 50%. So it's priced back to my discount or premium zone. Then, if you want to confirm your trade further, the model I showed you, depending on the time frame you got your POI, you look for a lower time frame break of structure, then you take your trade in that direction. So that's the way I approach. My entries or my POI. So let's now go to a real chart. Let's go to a real chart and show you some things on the real chart. Let me show you some things. This is BTC. Let me clear it out. Let me clear all this mess. And one thing I want you guys to know is, in trading, there is no holy grail. So don't think because probably you've done your proper, you waited for your confirmation. That doesn't mean, that's not a guarantee that you can still eat SL. That's something about trading. You must understand the business you are in, that at one point in time or the another, maybe few times, you and SL can actually rub shoulder. That's where trading psychology comes in. We are still going to talk about trading psychology. I like to talk about that one last so that we lay more emphasis on it. So I like to talk about it last so that we have more time to dwell on it. But it seems the next class I'm going to chip that in so that we talk about that. So like I told you, this BTC on the daily time frame. This BTC on the daily time frame. As you can see, I told you, what do I want to see in my for me to have a valid POI? I want to see a sweep of liquidity, and we all know equal highs. equal highs, or you look at how all these highs, sometimes it doesn't have to be equal, but you can see these are all liquidity. This is a sweep of liquidity. That means I now have a PO high. I want to see a sweep of liquidity, then I have a PO high, I have a PO high. Then what else did I tell you? I want to see an imbalance. Look at this large imbalance after sweep of liquidity, then large imbalance. This is another valid institutional candle as well, or valid supply zone as well, because there is a sweep of liquidity, and look at the imbalance. Price gave a very large imbalance. So as price is here, price can decide to tap into this place. So what we do to confirm this zone, whether this zone is going to hold it, okay, I have a sweep, I have an imbalance, price has returned into it to mitigate it. And one thing I want to see is, okay, after price return, look at here, equal lows. Let me shift it forward so that you see it. This is equal lows. This is an area of liquidity. This is going to be my first target. Apart from the fact that this is a weak low that refused to create another higher high. You all know the meaning of weak low. We've talked about this. This is a weak low, then equal lows. Price goes towards liquidity. Liquidity attracts price. So I use liquidity for my TP. Anywhere I see liquidity build up after taking my trade, I aim that place for my take profit. And this is going to be a take profit area. So what do I want to see here? And I told you this is a daily PO high. I want to see at least 1 hour break of structure to the downside to show commitment that price is ready to go down. So let's check what we have here. We have higher high. We have higher high. Let's say another low here. We have this high. We have this low, higher low. So we have another higher high. We have this low. We have this low. But one thing you have to understand is, for me to have a valid break, I'm not looking for a weak break like this. This is just a weak. I like to see a full body break, not a weak, not something like this. This could be a sweep of liquidity. This could be a sweep of liquidity because it's just ordinary weak. The candle didn't close below this higher low. But assuming it's a full body close, I would have taken this as a valid break. I like to say a full body close, but oh, sorry, I'm taking this one away. Okay, let me even remove it so that you will see clearly. So I like to say a full body close, but you can see price has given me another level of, it has given me another level of supply. This is another level of supply, which we can still play, but I'm not comfortable with seeing a weak break. And if you look at it, there's a sweep of liquidity as well. There's an imbalance. So what I'll be waiting for is, okay, if price comes into this place, then I switch to, this is a 1 hour time frame, then I will switch to 5 minutes. And what do I want to see on 5 minutes? Just the same play, a break. Look at this area. I want to see a break. And now, okay, I even like what I'm seeing here. Let me show you. And I like this illustration a lot. I like this illustration. Now, in the case where you have, if you look at what I have before me here, let me mark it up. Look at this sweep. Sweep of liquidity. Look at this sweep of liquidity. Then liquidity. Okay. Look at this sweep of liquidity. All the money that is there. Look at how this weak. See, this is a weak sweep. That's why I told you I'm not comfortable with what I saw on the 1 hour. That is a weak sweep. It could just be a sweep of liquidity, and see, a sweep liquidity, broke structure immediately to the downside. So now when you have something like this, let me make the screen, let me zoom it very well so that you see. I want to show you something. When you have a sweep like this, and what do you see? What do you see? Look at this area. I'm coming. Let me mark it out. Look at this. You know, for some people, they'll be looking to sell at this point. Some people will be looking to sell because this is also you know, a PO high that is valid. But when you have something like this, especially when it's when you have two, because this week is actually a PO high, a sweep liquidity. So there is, you know, it's all about smart money concept is all about manipulation. This candle manipulated those people that are here. So it's a valid one. Then you have another PO high. So if I'm going to be taking this trade, I'll see this as an inducement. You know, I told you when I'm taking my trade, I'm either looking for liquidity before my PO high or an inducement. Liquidity and inducement is almost the same thing because it's just a way of luring in the early sellers or the early buyers. So the ones that doesn't understand will be looking at this area to place their sell order. We'll be looking at this PO high, but when I have the two like this, I'll go for. When I have the two like this, I'll take this place, I'll take the week as my PO high. I'll take the week as my PO high, week. Why? This is an inducement. Why that would be an inducement. So this is where I'm going to be taking my trade. And if you still want to further confirm this trade, you know, this is now a 5-minute supply. When price comes into it, you wait for 1 minute break of structure to see commitment to the downside before you enter your trade. So it all depends on how patient are you when you want to take your trade. Are you patient enough to wait for all those break of structures? It's now left to you. But it is good if it's better you patiently take your trade rather than taking a wrong trade. It's better you patiently take your trade rather than taking a wrong trade. You know, I emphasize this a lot, a whole lot. I emphasize this a whole lot. So let me take you to another one. Let me show you another example on this is AUD JPY. This AUD JPY. AUD JPY. Okay, let me just show you what happened there. Let's go to 4 hours time frame. Let's go to 4 hours time frame. Not this one. Let me show you this entry. Okay. Let me show you what happened on this entry. Okay, so now let me demarcate it. So this is a 4 hours POI. This is a 4 hours POI. This is a 4 hours POI. So like I told you, let's go to 15 minutes and see what happened on 15 minutes before the trade. Where's that vertical line that I put there to locate my area? Please, if you have any question, just drop it on the Telegram or send it to me directly. I'm going to attend to all questions. So as you can see, you have a 4 hours POI. See what is price creating higher high, higher high, higher price is creating higher low, higher high, higher low, higher high, higher low, higher high, higher low. See, after creating this high, what did you see? What did you see? This is a break. This is a change of character because this demand, look at this demand, put above this high. This is even another demand that puts this high. So for price to overpower a demand level, look at what has been happening here. There has been no overpowering of any demand. But look at it. Price tapped into your 4 hours POI and supply exceeded demand. Then price returned again. You know, I told you price will always create 15 minutes to has created. Look at the area of 4-hour supply. That's why we keep on emphasizing that you cannot be taking trade on higher time frame. If I look at the number of pips this 4 hours time frame is going to cover, look at it. This is about 45 pips. This is about 45 pips. But when you wait for a 15 minutes break, change of character, then the 15 minutes time frame has created its own level of supply. Look at it. Look at it. This change of character. So you must understand supply and demand. Now supply has exceeded demand. That's where you have your change of character, and price came perfectly to tap into the 15-minute supply. And what did you see? So your stop loss would have been, even if you decide to use 15 minutes time frame, your stop loss would have been, let's say something like, it would have been about 19 to 20 pips. And look at it. Price has just been going down. Then you have your break of structure here. Price even still returned to mitigate the 15 minutes once again. So assuming you are using, what's it called? You want to use a 1 minute time frame. You mark out your 15 minutes area of supply, just like this, and you wait for price to come and tap into it. You wait for price to return and tap into it, then you switch to your 1 minute time frame and look for the same model. And look at it. Price came, look at it. This demand put up this supply. Then at this point, supply exceeded demand at this point. And what did you see? Price returned, mitigate from this area, and price keep on going down on AUD-JPY. On AUD-JPY. And price keep on going, and going. So that's it about entry. So if you have any question, please do well to drop it for me on the Telegram channel. Do well to drop it for me on the Telegram channel. And I keep on emphasizing divergence a whole lot. Divergence. Let me show you something on divergence. There's a player I saw on Euro USD. Assuming you understand divergence, I emphasize that divergence a lot. Let me bring out my MACD. And what is divergence? See, sometimes people say a whole lot about indicator is this, that nonsense, but I told you the way I trade, I don't follow what everybody says. I do my own research and I come up with my own, opinion. I don't follow what everybody says out there. Now, divergence, I'm just chipping this in because, in case you've seen me use the MACD before, when price is going to a particular direction, indicator 2 is supposed to go in that direction. But when you come to, I have a video on divergence I already dropped for you, so I'm not going to be going deep into it. But when you have a situation whereby price goes in different direction, then that's a divergence. It's just, for instance, you and your wife, you go into a supermarket, then your wife turns into the right way, then you follow the left aisle of the supermarket. That's a divergence. So look at what happened there. Euro USD has been going. Look, Euro USD created higher high. But on MACD, what did they see? Price created lower high. Oh, this thing is not let me. What did you see on MACD? Okay, my internet is lagging. Okay, let me do that again. What did you see on MACD? MACD created lower high. So if you know how to use divergence, what happened afterwards? Look at the drop to the downside, bam, to the downside. So the indicator and price must go in sync at every point in time. So for instance, if you have a PO high, you are looking for price to come there, you can use divergence as a confluence as well, because we are all looking for what's going to give us edge in this market, what's going to give us, better edge up. We are looking for edge up that is going to give you edge over the market. So if you, assuming I want to take this is my PO high, and look at what happened, the price has swept all this liquidity, and I saw divergence. And after price has swept liquidity, price is likely to reverse, and you have a additional confirmation here. And what did you see? Pound. So you can do a whole lot of back tests on divergence. Look at what happened there. Price is creating lower lows. Price is creating lower lows. What did you see on MACD? MACD indicator creating higher high. What did you see on MACD indicator? Price created lower low. What happened afterwards? Boom, to the upside. That's just it. That's it. Boom, to the upside. Look at here. Okay, price is in sync with what is happening here. Price is in sync. And the other time I promised to show you how to take a trade or confirm a trade with MACD. Let me show you an example here. For instance, this is actually for those that doesn't understand. Maybe I'm this kind of person. I don't mandate everybody to learn SMC. Not everybody will be a smart money trader. I used to say it a whole lot. If you have challenge with understanding all this break of structure, change of character, PO high, mitigation, English is even too much. If you are that kind of person and you still want to trade effectively, you can just implement the use of MACD in your trading, and it's going to change the whole ball game for you. And let me show you how. Let me show you how to do that. Let me show you how to implement a MACD in your trading. But if you want to implement MACD in your trading, you need to use it together with a trend line, because you must understand when there is the end of a trend and when there is a continuation of another trend. So, for instance, let me show you an example here. Look at this uptrend. Look at this uptrend. So you implement your trend line. So like I told you, I'm not like other traders that will tell you it's only SMC that is working. Every other strategy is working depending on how you know how to use it. So you have an uptrend. Look at it. You have an uptrend. Then let me bring out the MACD. The MACD is I have a mentor that I've been following for years that uses MACD since till now. And I learned this from him. Look at this uptrend. What are you seeing on MACD? MACD indicator 2 is giving you, as price is going up, MACD 2 is going up. Look at where you have your break. You have your break here, right? You have your break here, right? What did they say on, look at there. Price gave you this high, MACD 2 gave you this high. Look at where you have your break. You have your break, right? What did they say on MACD? MACD gave you a low, right? There's a low on MACD. So you only want to be taking your trade when MACD comes back to give you a high, because you always want to sell from high. This is a secret I don't think you see it on any YouTube channel out there. You won't see it on any YouTube channel out there. So now I go to my 4 hours time frame. Let me put a vertical line here. Let me put a vertical line. We have a break, then MACD gave us a low, then we have another high. MACD 2 gave us a high, but it's not clear here. So you go to your 4 hours time frame, and let's see what happened on 4 hours. Okay. So look at what happened. MACD gave us this low. So what you just do is you wait for price You wait for MACD to come and give you another high. But you must understand, and this is what I used to tell people, that see, you don't just use indicator on their own just like that, or you get yourself into trouble. You must still understand, structures. You must understand structures. Now, you wait for MACD to come and give you an high. If you just take your trade automatically from here, you would have been taken out. But look at it. Like I always, that's why I emphasized divergence. I emphasized divergence. Look at what MACD is telling you. MACD is telling you that this current trend, this current top trend that we are seeing here is getting weak. That's one of the importance of divergence. It is not every time that price is going down on the MACD that you expect price to be going down there. But what it's telling you is that it's still on the AUDJPY is still on an uptrend, but this trend is getting weak. That's why you see price is creating higher highs, MACD is creating higher lower highs. MACD is creating lower. It's telling you that the trend is getting weak. So if you know that the trend is getting weak, then you look to your left. There will always be a POI to your left. Then this is where you want to take your trade. You let it run into the POI to the left, and that's where you want to take your trade. And just imagine you only implement MACD, you even be on a swing trade. The trade is just falling, and falling. And let me show you on even, let's go to CAD JPY. Let's go to 4 hours time frame. Let's see how we can implement our MACD. So look at how price is falling. Price is falling. Whenever you see MACD give you a high, look at what do you have? I2 falling down. So it's falling. Whenever MACD gives you a high, look at this. In fact, let's trace it so that it won't be like I'm just doing magic. Whenever MACD gives you that high, what did you have? Then just imagine you sold from there. This is your POI to the left-hand side, you sold from there. Whenever MACD gave you this high, what did you see? But like I told you, you must combine it with other confluences. So I just use it as a confluence. And even on BTC, I dropped the setup. I dropped this setup for you on BTC. And I purposely use the MACD so that you're just going to see that price is in a POI and MACD2 is telling me, you look at it. Price came into this POI, MACD2 has already given me a high. Then what else am I expecting? A fall from there. So, but I'm not just taking the trade automatically. That's why I'm waiting for my adequate break of structure confirmation right here. That's why I'm waiting for my adequate, for the fact that MACD has shown me. That's why I tell people, see, when you don't know how to use something, you don't know how to use it. But that's why some people, they don't know how to use indicator. They just keep on going out there. Our indicator is rubbish. Indicator is this, that. Start saying a whole lot of things that doesn't even, count. But, my MACD has already shown me that price is going down. Then I'm waiting look at my smart money play, because I already have confidence. Like I told you, I'm only in competition with this market. I'm not in competition with any other trader out there. So if we go out there, say that is a smart money trader that uses a MACD indicator, fine, I'm all good. So far, I killed this market. That's what I'm about. I'm not, what you say about me doesn't matter. It doesn't even count. So this is where I'm going to be drawing the curtain for today. If you have any question, kindly drop it for me. You all have my access to my DM. Drop your questions on the Telegram and let's trash the question out. So thanks for believing in us always, and see you some other time on the next video.